Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Asian stocks post modest gains as the rally in China shows few signs of stalling. Gold touches a record high amid prospects of a Fed cut this month. Chinese President Xi Jinping to host his Russian counterpart on Tuesday ahead of a military parade tomorrow. Local media says North Korean leader Jong Un has crossed into China on a private train. Plus, we dig into the instability in Thailand and Indonesia with BowerGroupAsia and how firms in the region should position for risk. Our top story today, China continuing to flex its diplomatic clout as President Xi Jinping hosts bilateral meetings with key allies in Beijing. Russian media have confirmed Xi will hold talks with President Vladimir Putin today. Bloomberg's China correspondent Min Lo joins us now from Beijing. So, Min, Putin met with Narendra Modi yesterday. He's going to meet with Xi Jinping today. What are we watching out for?
Yeah, it's quite an important meeting because it's President Putin's first trip to China since the Alaska summit with President Trump. So this is his opportunity to brief Xi on what happened during the meeting, what are Putin's plans towards a ceasefire in Ukraine that could possibly appease Trump and maybe ease off the pressure a little bit from Trump on China when it comes to the purchase of Russian oil. We're also looking specifically for any deliverables in terms of energy deals because Putin is being accompanied on this trip to China by his energy minister, by the heads of some of the state-owned oil and gas company like Gazprom as well. And we know Russia has been wanting China to step up its purchases of Russian gas. It wants China to invest in the Power of Siberia 2 pipeline, which would be able to divert a lot of gas that used to be sold to Europe to China. And Beijing has so far been pretty reluctant for its own reasons. It doesn't want to over-rely on Russia. It doesn't see an urgent need to step up purchase in a big way as well. So we'll see if there is any deal that would be quite significant and will likely have repercussions on how Trump will deal with China as well and perhaps influence any sort of, Xi-Trump trade deal that could come out later this year as well.
Well, we're also waiting on Jong Un's arrival in Beijing. That's going to be a pretty significant trip for him, sharing the stage with Xi and Putin, right?
That's right. He is now on a bulletproof train from North Korea to China. It's already passed through the Chinese borders. It is expected to arrive in Beijing later today. It's, again, a very significant trip because the last time he attended a parade of this scale in China was back in 1959. He did come to China in 2019. There was also the period when, Kim and Trump was having the year when they had the first Trump-Kim summit as well. But interestingly, just ahead of this trip, Kim was touring a new missile factory in Korea, as well as a chemical materials research plant that was part of the country's missile program. He unveiled a new development program for the intercontinental ballistic missile. And this is really in defiance of the pressure it's gotten from the likes of the US and South Korea so far to end its nuclear program. And it's in some ways a snub to President Trump as well, because Trump has indicated a willingness to meet with Kim. The South Korean leader has offered to host them both in South Korea, perhaps at the sidelines of the APEC summit in October this year. But still, he's going to be coming to China, standing alongside the other big brothers, President Xi and Putin. That's going to be an iconic image that is just going to be living on the internet for a long while. That symbolic show of unity in challenging this US-led international order, and perhaps a sign that maybe Kim is less willing to engage with Trump after the fallout of those outcomes of the first Trump-Kim summit in Singapore as well.
Yeah, very heavy symbolism at play here. What else are we expecting from the big military parade tomorrow?
Yes, of course. We are expecting China to put on a very good show. Expect, Air Force formation featuring fighter jets and bombers, some of the latest technology on display that defense analysts will be pouring through to examine what exactly is China capable of in terms of its military capabilities. But Chinese people are very excited as well. There are people who are saying they're going to take leave tomorrow to watch the parade. Security is tightened. There are road controls starting from 9:30 p.m. tonight until 6 p.m. tomorrow. The subway station the line is going to skip some stations around the Tiananmen Square. I understand some schools are asking students to stay at home to attend classes online. Some officers are encouraging employees to stay home as well because of the traffic controls tomorrow. But we are also looking out for any personnel changes because it's widely expected that the vice chair of the Central Military Commission, He Weidong, may be absent tomorrow. There's speculation that he might be under investigation for corruption. These things are normally not explicitly announced, so we want to look out for any new faces as well that indicate perhaps new people being promoted up the ranks of the military as well.
All right, plenty of clues to watch out for. Bloomberg's China correspondent Min Lo in Beijing. Let's check in on how Chinese stocks are doing in the meantime. Seeing a little bit of weakness at the moment. We've got the CSI 300 off by 0.8%. Similar story for the Shanghai Composite. Hong Kong stocks as well off by about 0.25%. A bit of a blip really in the rally that we've seen, and Chinese investors are also now borrowing record amounts of cash to buy local stocks. That's just further fueling this liquidity-driven rally. It's not really shown any signs of slowing down apart from, well, today we're off a little bit. All right, so let's get to our next guest, Hebe Chen. She's a market analyst at Vantage Markets. Hebe, I do want to start off with your observations around that big rally we're seeing in China. We had some colourful language from Ha Hong of Lotus Asset Management earlier saying this rally is heading for something beyond the imagination of the crowd. How's your imagination? What do you see happening?
Well, yes, I think this is definitely a very massive rally. But I think for me, it's also not unfamiliar if we're looking back for the past 3 years since the China's reopening story. We do see quite of a repeat of this, the China's bull stories that has been showing in the market. And also something they share quite similar for the past 3 years rally is they know most of them are built on the economy fundamental strength, but more of the sentiment. They either coming from the expectation that we're seeing a C put or the policy support their point of view. But this time, a slightly different is that they introduced the AI story. So what's quite interesting for me is the Chinese story is not quite a traditional, because the economy going well, there's opportunities coming, that we're seeing the confidence in the investors, but rather it's kind of skip the middle level and directly go into a level that let's just build up a story to let everyone feel very confident and rushing into the market. This is more looking like the story to me for the Chinese rally so far.
Yeah, the AI story is compelling, but then at the same time we get a situation like we had last week with Cambricon Tech issuing its own warning on its elevated stock price, just telling everybody to calm down a little bit here. So what's the true story here? Is this getting overplayed or are markets getting ahead of themselves?
Well, I think if you're talking about let's overplay, I think that overplay is you compare that if you're looking for the valuation, you're looking for the sales that they promise, it's definitely overplay. But we got to see, as I mentioned, for the Chinese stock story, it's often the quite other side story we have to price in. For example, for the China's chip story, they also coming with like a made in China story. They're trying to protecting the chips produced in China. They're trying to produce their own NVIDIA story. That's probably one of the bonus value that has putting into all this story. We're talking about the AI, we're talking about the DeepSeek early this year. And this element here is something that we maybe feel a bit confused from the outsider, but from the investor in China, they feel that this is quite promising to them.
How about the deflation story, however? And, we're seeing China's consumer-facing stocks in particular in the grip of a very damaging price war. I mean, the government's launched this anti-involution campaign. How do you see this story playing out?
Yes, I think the deflation story will continue to be the biggest pressure on top of the Chinese story, because that I think we always see some example coming from the EV story, seeing the price competition is getting to a so severe level that cutting the profits quite into the bones for the EV producers. I think this is just quite a example of how the deflation will really hurt into the corporate profit margin. I think that will continue to be the case. On top of that, I think back into the Chinese policymakers, they're probably trying to building up the confidence, as I say, the confidence either from the stock market, either from the other part of the industry story, to stimulate, to encourage the consumer to spending the money in your bank. Whether or not they work, I think we don't know yet, but I think deflation will continue to be the number one pain point for Chinese government.
Well, as I mentioned a little moment ago, Chinese investors are borrowing record amounts of cash to buy stocks, which is fueling this rally as well. Are you concerned about the amount of margin trading that's going on?
Yes, definitely. I think that's definitely not a healthy thing that we are seeing for as we back into whether or not that's sustainable. And we know that you're borrowing a big chunk of money with such a high, carrying such a high risk. You definitely want a high risk premium to compensate that. And that's definitely not healthy to supporting a sustainable market. I'm concerned about that, and hopefully that we do seeing more warnings to putting a limit on this animal spirit that the Chinese investors trying to rushing in to just be fear of the missing out.
And do you feel this rally was justified by the health of the earnings that we saw reported this season?
Yes, let's take a bit of that from there. I think Alibaba's story yesterday, for example, is a good example. I think that reminds me of the Amazon story or like Google story last year, reducing of some of the material translation into the concept to the real money. I think that's a positive story. But the thing is, there's how many Alibaba in Chinese stock. There's how many really at this level of the compelling, of the promising stories is that construct this rally today. So I think that for the investors, after this rally has been running a long journey, it's a timing to really check the fundamental, the healthy of the corporate, of the stock, the real you putting your money into.
Hebe, I just want to talk a little bit about Japan as well. We've got a 10-year Japan bond auction today, and we've got yields for that note hovering around highs that we've not seen since 2008. Would you be a buyer of Japanese bonds at the moment?
Well, I think that the Japanese bond has been quite a risk asset that we were talking about for the past 2 years. And the main reason, the fundamental reason is that we always cannot understand when and why the Bank of Japan were trying to keep that cautious. I think I do get a bit of answer from the most recent Bank of Japan's report. It's showing that even the inflation, the Japanese inflation is getting into such a high level. They have been above the comfort zones for over 3 years, but the Bank of Japan seems to still quite comfortable. They're still seeing that they will back into the 2% in financial 26. So which I think the key point I take from there is that they will probably would likely to see the Bank of Japan stay cautious, stay on hold for longer than the market expected. If that's the case, I think they will continue to translate into the volatilities in the bond market.
Yeah, I think perhaps we have been on hold a bit longer than the market expected, and we didn't really get any clues from the deputy BOJ chief today either around rate timing. So if you're thinking about timing and about scale when it comes to the next rate increase, what do you see coming down the line?
I think you do mention about the wage growth. I think that's the key element when we're looking into the inflation. I agree with you. I think the Bank of Japan is holding much longer than the market anticipated. That's because at the beginning we thought that inflation is the major trigger. If the inflation is high enough, the Bank of Japan will move. But what we have seen, I think from last year, especially after last August, the interest rate hike has triggered such a massive mess in the market. The Bank of Japan getting extra cautious for that. And they are now seeing the inflation will back into the target, which means that they are putting the bar is getting higher for them to making the immediate move. On top of that, that's the tariffs impact. The tariffs impact on Japanese economy is yet to be fully pricing. We know that they're starting to paying tariffs to U.S. They'll potentially, if they keep hiking the interest rate, will making the Japanese yen appreciated. They will even become a headwind for the Japan's export. So I think that's the actual reason they're holding that back. And that's the cases that will continue to play out, I think, at least towards the end of this year.
Hebe, in a little while, I want to talk about U.S. assets. But before we do that, I just want to get your view on which you see offering more potential upside for the rest of the year, right? Asian assets or U.S. assets?
Well, I think I'm still more positive for the U.S. case. That's because, of course, I do see quite a lot of risk, especially for this September. For the Asian assets, I think there's one key thing the market yet to fully consider, and that's referred to the headline today, is the geopolitical tension. We do seeing that China, Russia, India, they now seeing to forming a new group of the anti-U.S. leadership, and whether or not they will play out into the next major geopolitical tension. I think that's the cases the Asian equity will face, and that's quite significantly. There will be something out of imagination, I think, at this stage. And that's the reason that I probably play a bit safe. I will still feel the more positive for the U.S.
All right, Hebe Chen from Vantage Markets is sticking around. We'll talk a little bit more about the US and Fed policy in a moment. But also coming up, Evercore, the most bullish call on US stocks yet on the street, forecasting strong gains through the end of next year. We'll have the details on what's behind that optimism. This is Bloomberg. Welcome back. You're watching Insight. Here are some of the other stories that we're following. Bloomberg has learned that OpenAI is planning to build a massive new data center in India. Sources say they're currently scouting local partners to set up a facility with at least 1 gigawatt capacity. The exact location and timeline of the potential project remains unclear, but it's expected to mark a major step for OpenAI's Stargate-branded AI infrastructure push. New World Development's controlling shareholder, the billionaire Cheng family, is said to be considering injecting capital into the debt-laden builder. The move could take place as early as the end of this year. Sources say Henry Cheng is willing to contribute about $1.3 billion and is looking for a partner to provide a similar amount for an equity stake. All right, let's take a look at how U.S. futures are tracking. Of course, no trade today. It was a public holiday. Markets closed for Labor Day, but we do have strategists at ISI seeing U.S. futures could move another 20% in 2026 around some of that AI excitement that we see futures right now a little bit flat ahead of the reopen. Let's get back now to Hebe Chen, market analyst at Vantage Markets, back with us now to talk about all things U.S. So, Hebe, how do you expect things to trade when we get going again after the long weekend, and what's your price target for the S&P for the end of the year?
Well, I think that as most of people expecting, I think September will be the time that we'll probably see a bit of a pullback from the all-time high from the record, because they will have a lot of uncertainty here. But I think after this September, I do see a bit of roughly about 5% potential from into the Q4, and that's because either that we have quite a lot of answer being clear from the September meeting, and we're seeing that people getting more cautious, more realistic about what we're expecting, but also we're also expecting the Q4. The Q3 earnings will be showing a bit of this still strong, and then will better than the Q2s.
So we talked a little bit about your approach to the AI sector in China. I'm just wondering what your exposure to AI is in the US, because we're seeing very elevated prices, particularly for those big names like NVIDIA. So how do you add to your positions if you're interested in doing so?
Well, on top of that, I'm still quite positive about, for example, NVIDIA. I think because they are the infrastructure they were supporting, and we continue to seeing that a lot of the construction. I think yesterday we're seeing that this AI center will be built up in India. They're also showing they still have quite substantial demand, and especially for the past quarter earnings, we're seeing that they're already doing see of the translation into the real capital, real demand. So I'm still positive on that, but I think that they were kind of broadening out, probably seeing a bit of the applications, a bit of the other functions they will get benefit. For example, the cybersecurities, and they will potentially benefit from the AI. These are something that we probably yet to fully price in, but they will definitely grow at the same speed as AI as the whole industry getting more mature.
Well, we have seen the White House injecting itself into the AI story as well, particularly in terms of chip restrictions, also taking a stake in Intel also. Do you have any concerns more broadly about political involvement in corporate America?
I definitely do. I think that the political, not just for corporate, like for example, for the central bank independence, for the corporate independence, they think the major concern. The major concern is first is on the decision making. So whether that means that these corporate were making decision making is not just purely for the shareholders' benefit. Number two, would they really benefit for the end users? Will there be any restrictions on that? On top of that, I think there's also big concern about how sustainable this political impact will continue to influence for the corporate world. And this is quite a bit of the mixed box that we don't know what's going to happen if that we're getting more political influence into the corporate execution of their strategy. So I think for this stage, I will taking a bit more cautious view on this new move from the White House.
Yeah, and we're seeing political pressure also in terms of the Fed. I know the market and yourself included and many market watchers see 25 basis points of easing pretty much baked in for the next meeting. But you're describing it as a hawkish cut. If the pace of easing from here on out continues to be too slow for President Trump's liking, how likely is it we're going to see intensifying pressure on the Fed? And does that give you any headaches?
Yes, I think, as you mentioned, the market now is seeing almost fully pricing the 25 basis point cut. And I think that even more likely is definitely this is going to a hawkish cut. The reason for that is because we know that the cut at this point of time is lacking a quite solid foundation. I know that the Fed referred to the job market is showing the weakness, but we know that the weakness in job market is more because of the policy driven, because of the immigration policies changing the labor supply, because of the uncertainty coming from tariffs, they're holding the hiring back. And this is not economy driven. So that doesn't 100% translate into the concern the Fed should have that because the economy is weakening, so we have to cut. So that's why I mean that this is not on a solid foundation to making the cut 25 basis point in September. But if they are really to move that, they have to balance it out. They balance out with either a hawkish tone, either they could potentially putting it into the quarterly economic projection sheet, showing their concern about the economy or the inflation upstick. So overall, I think this is more likely a story that will play by Fed, and that potentially will translate a bit shock and unwelcome message to the market, I'm afraid.
Well, the market's been quite relaxed about all these questions around Fed independence so far, but where's the line here? At what point would we see a reaction, and where do you place the risk of a market tantrum over perceived interference with the Fed's independence?
I think, yes, whether how much that the political pressure has really changing the policy direction, I think that definitely is sort of a very ambiguous line there. For instance, to a very extreme extent, if the Fed are cutting 50 basis points in this upcoming meeting, I think they will be showing the policy pressure rather than the real economy pressure. But something in between that, I think, is coming from that whether or not Fed could stick to their dual mandate with quite a solid reason. Again, back to the labor market, they do think they can quoting a reference into the weakness in the labor market, but will or not they will addressing the real drivers behind the weakness there, or just purely taking what the number says and because of the number that we have to do this. I think that's also quite a balanced act. We will see fair play, and from our perspective, we're seeing the balanced act is towards which part.
Mm-hmm. All right. Hebe Chen, market analyst at Vantage Markets, thank you so much for joining us today. Still to come, BowerGroupAsia joins us next as political unrest and uncertainty rocks Thailand and Indonesia. That conversation comes. Welcome back. You're watching Insights. Markets in both Indonesia and Thailand are now trading. Let's take a look at how we're going as we track the latest development amid political unrest and uncertainty in both countries. At the moment, seeing quite a bit of support for equities. We did, of course, have the Indonesian Central Bank stepping in to support the rupiah. And so far, measures to calm the political situation seem to be persuading the markets, both those markets in positive territory at the moment. For the latest now, let's get to our team. Bloomberg editor Soraya Permatasari in Jakarta and reporter Patpicha Tanakasempipat in Bangkok. Soraya, let's start with you. Indonesian Finance Minister Sri Mulyani Indrawati speaking out after protesters looted her home. What did she have to say?
Yeah, so a few things. First, shortly after the looting incidents that hit the finance minister's home and those of several lawmakers, there were rumors that the minister, Sri Mulyani Indrawati, would resign, which would not be good for markets, obviously. However, yesterday she posted on Instagram a photo of herself with President Prabowo Subianto and of her attending the latest cabinet meeting on Sunday night. Now, this seems to have put the rumors to rest. But more importantly, she also apologized for the government's shortcomings. She acknowledged the protesters' demands, and she promised to improve government policies going forward.
So, Soraya, Indonesia is also confident that its economy is not going to take much of a hit from the protests. What's the rationale?
Yeah, so there are a number of things that the government has said that's worth noting. Yesterday, the chief economy minister, Erlangga Hartarto, came out to say that he doesn't think the recent unrest will have a significant lasting impact on the economy. He said the government continues to extend its stimulus spending to sustain growth, and he's confident that the country will reach its annual growth target of between 5 and 5.2% this year, despite the unrest.
Patpicha, I want to get over to you as well. In Thailand, the opposition People's Party now set to play kingmaker as rival groups look to form the next government. So what's the latest?
Paul, the latest is that things are still very fluid. Political parties are still jostling for power. We're now seeing a heated race between two rival groups, which are now trying to form a government, which are the Pheu Thai Party, which now lead the ruling caretaker coalition, and the rival Phumjai Thai Party, which exited the same coalition earlier in June and is now in the opposition. Now, neither coalition has the majority right now to back their respective prime minister candidate, which is why they need the help of the People's Party, which is the largest group in parliament. And the People's Party leaders and members of parliament will meet again for a second day later this afternoon to decide whether it will back a prime minister candidate from either coalition or none at all. And we will see later today if there will be any consensus reached on that.
So how are economists evaluating the risks around the political uncertainty?
Right now, investors seem to be shrugging this off, as you can see in the rise of the stock market just now with the set opening, just now opening. But in the long term, political instability will likely weigh on investor confidence and hurt economic growth prospects. And now economists have said that they could probably expect steeper and more rate cuts from the Bank of Thailand, which has cut already its key rates by 100 basis points since October, and now the rates are at 1.5%. And still there's a bright spot right now because the House of Representatives have already passed a budget bill for the year starting in October, and the Senate is likely to approve that bill today. So the impact on public disbursement may be affected for the time, maybe less affected for the time being.
All right, Patpicha Tanakasempipat in Bangkok and Soraya Permatasari in Jakarta. Thanks so much for joining us. Let's get some more on the potential business and policy implications. Let's get to Nydia MD of BowerGroupAsia, a strategic advisory firm that specializes in the Indo-Pacific. Nydia, thanks so much for joining us today. Let's start with Indonesia. How concerned are you about the recent unrest? How great is the risk of it growing and fueling further instability, and what could the potential impact on growth be?
Thank you very much for having me today. As you know, my company, BowerGroupAsia, we do have some of our biggest offices in Indonesia, so we are definitely watching this very closely. And I think in terms of what we're seeing right now, I think it is important that, some of the changes that President Prabowo has promised are more than just symbolic changes. I think some of the announcements that he had made over the past few days have indicated that, he is listening to some of the on-the-ground concerns, which is good. But I think we need to also look to see if there will be more coming to reflect that he is genuinely listening to some of the concerns that have been raised by the protests to make sure that, reform is systemic and not just symbolic.
All right, so what does systemic reform look like to you? What reforms do you feel need to be put in place here?
He's already cut back on some of the perks and privileges of the lawmakers within the country. And I think that, there has also been a recent court case just last week that looked at how, ministers or more junior ministers are not allowed to hold on to concurrent positions. And I think that if he's to act a little bit more quickly on that, I think he needs to also show that, he's able to listen to what the court has announced to be able to agree with that decision and also move quickly in that regard and show that, he is listening to what the protesters are talking about in terms of showing also signs that he is committed to the austerity, especially because of some of the how protests have been so wide about what showing really unhappiness over what has been taking place over the past few weeks.
And what policies do you feel need to be introduced to address some of the inequality in Indonesia? Do you anticipate more social spending, more support for the regular people? And do you see that could have a potential knock-on effect for inflation?
I think that those two are invariably linked, but I think definitely if we are to look at, how things are going to proceed going forward, if you are looking at trying to appease the general populace, I think that definitely more needs to be done in that regard. And if that's a higher spending in terms of higher social spending, then I think the government will need to look at what's happening and see if that's going to take place. Clearly, they've already proposed cuts to the regional governments, and that has prompted regional governments to raise taxes in that own regard, which has again led to more riots and protests across the nation. And so I think that that's something that they would need to really have at the back of their minds as they think about what to do going forward. But that's definitely something that I think government and policymakers would be considering as they work through the coming days.
Well, we have seen Indonesia's central bank stepping in to help support the rupiah as well. How enduring do you feel like that move is going to be? Is that going to be enough, or do you think there's going to have to be some more action from the Bank of Indonesia?
I think it really depends on how the rupiah performs in the coming days, but of course that's really anyone's guess. And I think right now, just given how the protests and the riots are going, I think that things need to be taken on a day-by-day basis at this point in time. Businesses are definitely worried about how this will impact operations and access, and I think that it's very hard to crystal ball gaze at this point in time. And I think looking at it from a day-to-day basis right now is probably the best way to go forward at this stage.
So how's the unrest impacting the investing environment in Indonesia as well? Can you give us some insight into what advice you're giving your clients?
I think right now we're telling our clients to lay low a little bit and to hold off on any potential trips. That is definitely something that we are telling our clients. We are also telling our clients to hold off on any major decisions right now when it comes to Indonesia, feeding our clients with information every single day based on the developments that have taken place. Unfortunately, I think this is the state of the current world that we live in, where there are so many changes that are happening day to day, not just in Indonesia, but in the rest of the world as well. And so our analysts on the ground are really trying their best to make sure that our clients are being given, the best information that they have at that time, so that they can make, so that they can also then use that information to inform some of the strategies and calibrate as necessary.
Well, we're seeing political upheaval, as we were discussing a moment ago, in Thailand as well. We've got the People's Party being courted by other areas, the political spectrum, to form a new government. They would like Parliament dissolved and fresh elections. How do you see this situation unfolding?
I think that right now in Thailand, I think there's also still a little bit of uncertainty. What if they're not able to come to terms, with who should be the next prime minister? I think your reporter just now, did a great job in terms of summing things up in terms of where the candidates stand, and also highlighting how, the People's Party is now potentially going to be a kingmaker. If they are not able to choose a new prime minister going forward, then, I think the question then falls onto whether or not the current caretaker prime minister is going to be the one that dissolves the government. And I think that there's definitely some uncertainty there about whether or not he has the power to do so under the constitution. And so I think regardless, whether it's under a caretaker government or whether it is with a new prime ministerial candidate, I think it should either of the two big parties decide to go, should the People's Party decide to go with either of the two coalitions that are courting them right now, it does seem like elections may be coming soon, since that is one of the People's Party's demands as well for early elections.
Yeah, well, if we do get an early election, do you feel it's going to change the political landscape in any meaningful way? What are opinion polls suggesting about how that might go?
I'm not sure what opinion polls are saying about this at this point, but I think we can look to what has happened in past years. Unfortunately, political instability has been, I guess, somewhat characteristic of Thailand in the past couple years. But that being said, I think that its investment environment still has a number of strengths that we need to look into. This includes, great infrastructure and an excellent market, and also their board of investment is still looking to see how they can attract investors to come in, notwithstanding the political instability. So I think that if that's something that companies would just need to weigh and consider as they look through, I think that regardless of what happens with elections, whether or not they do happen, Thailand still has sectors that are booming, and still has certainly a lot of attractive qualities to it as well. Of course, right now we are telling our clients, again, similar to what we're telling them in Indonesia, that we're giving them day-by-day updates, and also to not make any big decisions, but at the same time, specifically for Thailand, we are also talking to them about, engaging more at the working level, rather than at the ministerial level, just because of potential cabinet changes that might be taking place. But definitely, we see the bureaucrats at the working level still doing their best to do their day jobs.
Mm-hmm. Well, you mentioned a little bit earlier that this is a state of political upheaval in Thailand that is not entirely unfamiliar. And, we do have to talk about the role of the military here, because in previous episodes of political upheaval, we've seen military coups. How real is that risk for you at the moment?
I think it's really hard to say at this point, just given the candidates that are, the names of the candidates that have been pushed forward at this point in time. Again, not something that I can crystal ball gaze, but definitely not something that I would 100% rule out at this point in time. Too, I think just given all the developments and the turmoil that has happened, in the region as well as in the world, really anything can happen. But I think, I think the military would be a bit more cautious in terms of stepping in, just given the general popularity of the People's Party as well as some of the other parties and coalitions that are in the mix as well.
And do you foresee a more role here for the Bank of Thailand as well in terms of monetary easing? Do you have like a timeline in mind for the scope and the timing around that?
I would say that with the Bank of Thailand, I think again, they have to take it, they have to look at all the factors that are being considered right now, and it's really hard to say either way how things are going to go at this point, whether or not they will look into further easing, but I would leave that to more of the financial experts and not geopolitical experts like myself to determine when that would happen.
Of course. Well, it's not a great time to have political upheaval either, because there's a US-Thailand trade agreement still under negotiation. How do you see that unfolding when it's hard to say who the US should be negotiating with in Thailand?
You could always just flip that around and say that, who should Thailand be negotiating with the U.S., if not with President Trump directly? So I think that, negotiations are still ongoing. And I think that even though, and they have a deal, between Thailand and U.S. that was announced, I think, just last month, and details are to be worked out, and that can be done at the working level, which is what we have told our clients, to engage with the working level officials, and I believe that negotiations will still take place with the working level officials, and I don't think that would be disrupted by major political upheaval. Work still goes on every day for government officials.
All right, Nydia Ngiow, MD of BowerGroupAsia, thanks so much for joining us with your insights today. All right, got some pictures for you out of Beijing. It is President Xi Jinping meeting with or holding talks with the Russian President Vladimir Putin in the Great Hall of the People there in Beijing. Vladimir Putin is, of course, in China to attend the 2025 Shanghai Cooperation Organization Summit, also the commemorations of the 80th anniversary of the victory of the Chinese People's War of Resistance against Japanese aggression and the World Anti-Fascist War, better known in the rest of the world as World War II. So that parade is going to happen tomorrow. Vladimir Putin will be in attendance to that. Perhaps notably, Indian Prime Minister Narendra Modi has gone home. Won't be in attendance, but apparently North Korean leader Kim Jong Un, will be on his way to Beijing now. Got some other news to get you across as well. We were, of course, watching the auction of the 10-year JGBs, and it's gone very well. We were expecting to see some rather tepid demand there, but the JGB auction seeing its strongest demand since October 2023. So we're seeing bonds jumping there, the 10-year bond yield falling, backing away from those highs that it posted back in 2008, I beg your pardon. So that very strong demand for that JGB 10-year auction. Bid to cover ratio at the sale 3.92, and the benchmark yield falling a little bit more than 1.6%. Still to come, we will turn our focus to India as local institutions keep the faith in stocks despite rising foreign flows. We'll have details next. All right, let's take another look at the India Open. We're seeing some modest risk-on sentiment there. The Sensex better by about 0.1% in the early going. A little bit of weakness for the bank index as well. The RBI is going to be conducting some state government bond auctions today. We'll also be hearing from JSW Cement, going to be reporting at first quarter earnings. That's going to be its first results after listing, but got a little bit of positivity there in the early going in India. Stock purchases by Indian institutions, meanwhile, are inching towards a record this year, providing a cushion to the nation's $5 trillion market as foreign funds keep on selling. For more, let's get to our Asia equities reporter Ashutosh Joshi in Mumbai. So, Ashutosh, how important has domestic money become for Indian markets?
Yeah, hello, Paul. Thanks for having me on the show. Domestic money has been backbone of Indian equities in recent few years. In year 2024, we saw flows coming from domestic institutions that includes mutual funds and banks, hitting a new record at $63 billion. So far this year, we have already crossed $60 billion and very close to hitting a new record. This buying from local investors comes on the back of selling by foreigners. Foreigners have so far taken out $15 billion so far this year, which is again headed for a new record if this sell-off continues. If we take a broader view, since 2020, domestic money has been driving Indian markets. That the same period when India's equity markets, India's key benchmark, has more than doubled in last 5 years. That shows how important domestic money has become in India.
Yeah, and what's driving this almost relentless push from retail investors into mutual funds? Then the mutual funds, of course, eventually invest into local shares as well.
Yeah, mutual funds largely get money from retail investors, and that is one flow which continues to be very strong and robust. Every month we are seeing at least $3 billion coming from dedicated monthly investment plans into mutual fund. This money is helping drive Indian markets. At the same time, it's making up for the massive sell-off from the foreign investors. In last 5 years, as we have seen, mutual funds have provided stellar returns. That has created sort of unshakable faith from retail investors into mutual fund products, and that continues to hold firm.
So what's the sense from strategists that these flows are going to keep on holding up, and that's despite what we're seeing going on globally or the returns that are being provided by Indian stocks?
After almost 3 years, for the first time, we are seeing India's broader indexes are delivering negative return. However, despite this recent weakness, we are noticing that mutual fund flows are holding firm. Strategists are sort of divided. In case this weakness and underperformance to other Asian and emerging market extends, there is a case that flows from retail investors may take a dip. However, at the same time, with markets expected to see some sort of rebound in coming months, there is also an argument that flows will remain equally strong and robust.
All right, Asia Equities reporter Ashutosh Joshi there in Mumbai. Before we go, let's take a look at our show tomorrow. Insight's going to be live from Bangkok for an exclusive interview with the outgoing Bank of Thailand Governor Sethupat Sithiwarananput as he prepares to close out his 5-year term at the end of the month. Also, we'll have more exclusive insights with the Thai Airways CEO as the Southeast Asian nation grapples with its latest bout of political instability. That is it, though, for Insight. Horizons Middle East and Africa up next. This is Bloomberg.